I wanted us to focus a bit on Nigeria's debts. Well, it's not a crisis, obviously,
No.
but I want you to give us that reassurance, pretty much from what's your view on it. We've seen the debt figures spike significantly over the last 2 years.
Yes.
External debt has been up close to 100%, I think, over the last 3 or 4 years. Domestic debt obviously has been climbing significantly with the FGM bond issues. Do we have a crisis?
No, you don't have a crisis, but the trend itself is that the growing spending and borrowing at a time of a global slowdown and a recession that's normal panacea for slowdowns and recession. You got to be counter-cyclical. You got to increase your borrowing. And the question is, what have you used the money for?
But one asks that this year, revenue should have improved significantly, even from the budget projections. I think it was a $60 budget price, and of course, production has increased significantly. So why did we have to borrow so much then?
No, but the profile of your revenue, it is true. It's very simplistic to multiply price by production. It depends on where the production is coming from. If the production is coming from the PSCs as against the JVs, then the Nigerian government take is only 30% of that. As against when it's in the JVs, it gets 60%. Secondly, in the JVs, Nigeria has to put up the money for the budget. In the PSCs, they don't put up anything in the budget. So for now, even though you're doing maybe 2 million barrels or slightly above 2 million barrels a day, the revenue impact is actually the same as when you were doing about 1.7 under the JVs. So Nigeria's revenue is not, and takeaway is not as much as it used to be.
But let's come back to whether or not we have a problem here. I was just looking at the figures. Debt to GDP ratio, when you count external debt, is now up to about 16%. External debt, so when you count domestic debt rather, and then when you look at the external debt itself, like I said, it's up close to 100%. You know, in the global context, it really doesn't sound like a problem. But, you know, just share a little more.
No, the nominal values, let's say, I put it more like 14%. 14% is nothing compared to countries where they're about 80, 90%. However, the question is that what was that profile 2 years ago and what is it now? You're running down the debt. You're running down your revenues. You're running down your reserves, right? And what next? Are you going to... Meanwhile, the excess crude account is down to zero. More or less. The external reserves, which is a mirror of your Naira circulation, is down to $36 billion. But there's no substitute asset. You haven't used those proceeds to build any other asset. The infrastructure gap still remains about over $100 billion. Therefore, the problem is that what next, and what have you got to show for what you have done, what you have spent so far? So quality of expenditure is a problem. Quantity of expenditure is not too much of a problem, but the trend is disturbing. Because if you take that same mindset to go into borrowing, which is going to be different, then you'll come under a lot of pressure. So there could be a simmering crisis in the future if nothing is done to address it now.
And then let's talk a bit about why we're even borrowing in the first place, because you just mentioned the external reserve level at 37 billion. I mean, we have external reserve of 37 billion. Do we really need to borrow?
No, external reserves are not the government revenue. The external reserves are the assets that Nigeria holds to meet any obligations for its tradables and non-tradables. Therefore, if it is possible that those reserves belong to a private individual Nigerian or a bank or something, that the Nigerian government cannot just go and take that money. That Nigerian government will have to issue an instrument to that organization, and that organization will have to use those dollars to buy that instrument, and then the Nigerian government can now use it. So the Nigerian government can use it ostensibly to guarantee things, but it doesn't belong to the Nigerian government. It's the excess crude account, which is a Naira translation of a dollar which is not spent, which has not been monetized in Naira, that is available. And that has already gone down to zero, from $20 billion to less than $500 million.
Anyway, and we know that the external crude account, there's a transition to a sovereign wealth fund, which, interestingly...
Yes, it's going to take another $1 billion out of
We're looking to put legislation in place for that.
Yes.
Okay, finally, let's just talk a bit about the international bond issue. $500 million is planned by the federal government to pretty much increase the deficit, which I think a lot of people are getting concerned about. Yeah. What's the prospect of raising this money in the time frame?
I think it's difficult. The timing, 6 months to an election, it'd be difficult for international investors to buy anything, no matter how good the country is. So I suspect that if the issue is not closed or put in the market in the next 3 weeks or 2 weeks, then you might as well consider that to be done after the elections.
So the focus obviously will be the elections.
Yes, the elections, that's what it is. Nobody's going to buy into uncertainty right now.
But what about even the issue of the increasing debt profile? I mean, that's another concern, don't you think?
No, it's still, I mean, compared to any other emerging market, still very well within the comfort zone. But the point is that what are you trying to borrow for? Is it projects or just general consumption?
I think that's really
the problem. So if it's
a
a project, then let's look at the project. Nigeria has enough capacity for projects, LNG, refineries, power, and all that. But then the important thing is, what are you borrowing? If it's for consumption and just supporting general welfare of the state, then you're not going to raise that money.